The mining industry as of late seems to have a bit of a problem. That problem is that everyone is after those massive tier 1 deposits that can instantly make a new producer an intermediate gold producer. But only so many of those exist. What about those deposits with 1 million ounces that could theoretically be economically mined for a decade or two, but at a smaller scale? Even a 500,000 ounce deposit will give you 50,000 ounces a year for 10 years, provided that the geology is right. Well, that's where names like Sonoro Gold come into play. Let's dive in. Sonoro Gold is a TSX Venture listed issuer who is currently focused on developing the Cerro Caliche gold project, which the company boldly bills as Mexico's next gold mine. Unlike most names out there, these guys are focused on developing a smaller scale project that will take less capital and less time to get into production. Current projections suggest that the project will take just 8 months to go from site preparation to mine commissioning, while only 5 of those months are dedicated to actual construction. In other words, the time frame from project financing to generating income is extremely short, which is one of the perks of a smaller project. To add to that, what the company is doing is nothing new to the executive team, whom have collectively developed 12 gold and copper mines over their career spans. In other words, they've been here and done it and know exactly what to expect. So let's get into the Cerro Caliche project. Found in the state of Sonora, Mexico, Sonoro Gold's Cerro Caliche project is located in the middle of a triangle formed by Agnico Eagle's Santa Gertrudis project, Bear Creek Mining's Mercedes mine, and Gold Group Mining's Cerro Prieto gold mine. And if that wasn't enough to tell you there is plenty of gold and silver in the region, Magna Gold's San Francisco mine and First Majestic's Santa Elena complex are also just a stone's throw away. And for those of you that have no idea where any of those mines are, the project is located 3 hours from both Hermosillo, Mexico and Tucson, Arizona. Plainly, it's very accessible in a very pro-mining jurisdiction. Consisting of 15 contiguous mining concessions, the project is currently in the permitting stage for a proposed open pit heap leach mining operation, with an environmental impact statement filed back in May of 2022. The current plans call for a 12,000 ton per day operation that will generate enough cash flow to support the exploration of 70% of the concessions that so far remain unexplored. And quite frankly, the economics look quite lucrative as far as mining goes. A PEA released in mid-2023 suggests that the project will see an internal rate of return of 45% on an after-tax basis, which is pretty uncommon in the sector. So let's get into the PEA. The preliminary economic assessment released by Sonoro on the project suggests that Cerro Caliche has an after-tax net present value of $47.7 million, which is based on a 9-year mine life. The estimate outlines an operation that would process 4,000 tons of ore per day in the first 2 years of operation, before ramping up to 12,000 tons per day in year 3. Over the life of the mine, it is expected that about 286,000 ounces of gold and 938,000 ounces of silver will be recovered from the operation, or about 298,000 ounces of gold equivalent, which shakes out to an average of 33,000 ounces of gold equivalent a year or so. Cash costs, meanwhile, are estimated at $12.95 an ounce. No, it may not be a size queen, but that's still a respectable level of production each year. And all this is based on initial capex costs of about $15.5 million, with the mine boasting a payback period of 2.8 years. Over the life of the mine, it's expected to cash flow about $70.1 million on a cumulative basis, which of course assumes that future exploration simply yields no results, which is an assumption that seems kind of unlikely. We should also state here that these economics are based on $1,800 gold and $23 silver. A sensitivity analysis conducted in conjunction with the PEA suggests that the after-tax net present value climbs to $77 million at $2,000 an ounce gold and $28 an ounce silver. The payback period, meanwhile, declines to 2.4 years in such a scenario, while the IRR jumps to 63% on an after-tax basis. And while we don't know the exact numbers at $2,600 gold and $30 silver, we can only assume that, well, they're a lot better. By now, you're probably thinking, okay, Steve, what about the mineral resource estimate? And high level, admittedly, it doesn't look that sexy. Cerro Caliche is currently estimated to have 280,000 ounces of gold at 0.44 grams per ton and 2.24 million ounces of silver at 3.5 grams per ton within the indicated category. A further 140,000 ounces of gold at 0.42 grams per ton and 1.3 million ounces of silver at 4 grams per ton exist within the inferred category. On a combined basis, the project boasts about 440,000 gold equivalent ounces. That estimate is based on 59,500 meters of drilling across 544 drill holes, along with 17 trenches. The technical report also identifies that exploration potential exists just outside of the pit shells, where exploration has been deemed too limited to establish grade continuity. The exploration potential within these drilled areas suggests that anywhere from 125,000 to 285,000 additional ounces of gold equivalent exists. To add to that, only 30% of the known mineralized zones at Cerro Caliche have been mapped and assayed, which means plenty of potential exists to dramatically expand the mine life of the project. All right, so let's wrap it up. Sonoro Gold's Cerro Caliche project is by no means a massive undertaking. At an average of 33,000 ounces a year, it will amount to a nice little operation that brings some cash flow in the door as Sonoro focuses on their next big project, enabling the company to be self-funded. And well, yes, it is a proposed open pit mine in Mexico. Claudia Sheinbaum, the new president of the country, seems amenable to the extraction method. She said multiple times that investors in the country have little to worry about and seems to welcome the mining sector. I guess we'll ultimately know her position on the matter based on whether Sonoro gets its permit. But at this juncture, it appears that Mexico is experiencing a return to normalcy as far as mining goes. As for Sonoro, they appear to have a low-cost asset that will power the company through to the next stage of their development. At least management seems to think so, with multiple executives having acquired additional shares in the company in recent weeks. Collectively, they own about 24% of the company, which is nothing to shake a stick at. All right, everybody, thanks for watching. If you enjoyed this video, please let us know what you think in the comment section. Also, smash that like button, subscribe, and ring that notification bell. Thanks for watching, everybody.